Welcome to All Things Finance in just a few minutes, and in this week's edition, we will be covering the Monthly Budget Tracker Volume 2. Picking up from where we left off last week, I've added a few new calculations that should help in your month-to-month analysis. I've added one item called Ending Balance, including next month's bank activities. Now this calculation will help you project where you will be at the end of next month after your expenses have been deducted from your account, but before you bring any income into your account. Say, for example, if your expenses are deducted from your account before you get paid, then you can use this calculation to make sure that you will not go into overdraft. So the way it works, it takes the ending balance that you previously calculated, it takes all the bank activities, which in my example is my home expenses, my student loans, and other expenses, and it simply recalculates a new ending balance. So in my example, if all of my expenses are deducted from my account before I get paid, then I now have a $840 overdraft. The ways to avoid that is to try to move all of your account deductions later in the month after you get paid. So if you're working in Volume 1 and you wish to include this calculation, simply highlight it, copy paste into B60, and you see that everything is linked. Okay, so the next box is called a reserve calculation. Now what this does is it takes your monthly expenses, which in my case is home, student loan, and other, and any other accounts that you have, and it calculates a total monthly billing expense. And then we take that number that we previously calculated and we multiply it by 6. Now this is called the rainy day fund. You always want to keep 6 months of expenses saved up just in case you were to lose your job or if any unexpected expenses were to pop up. So as you see here, this is linked to our current cash balance, which is $661. That means that we have $7,909 to go until we meet our 6-month goal. Now if you wish to have a larger reserve, say 12 months instead of 6, you simply update this number to 12 and you see that calculate below. So for now we'll keep 6. If you wish to update this in version 1, simply copy paste in K46 and we just have to update our current cash balance. That cell is off. So this next box is to help with projections. So let's say my net income each month is expected to be $580. Therefore, if I want to do an income projection for the next 12 months, I will say $850 multiplied by 12, and this tells me that I will have about $7,000 in 12 months. Now, let's say for the projections, if you wanted to know how much money you would save for the next 24 months, if you were to save $580 each month, you simply update the 12 to 24, and there you are, $14,000. So for now, we'll keep 12. Again, if you want to bring the income projection into volume 1, simply highlight, copy, and paste in K60. Everything is linked. So we've just added 3 new additional tracking items. 1 related to protecting against overdraft, 1 related to calculating your 6-month reserve, also known as the rainy day fund, and lastly, the 12-month income projections. So at this point, if you've updated your monthly budget tracker version 1 with these 3 changes, you are now working with the most updated file, monthly budget tracker version 2. So we have 2 more items to complete. 1, which I will show you now, is how to roll over the January 2020 tab to February 2020 and begin updating for February. You simply hover over the January 2020 tab, right click, duplicate, and update the naming convention of the tab. Once you do this, you will update the beginning balance. Now since you've previously calculated the ending balance in the January tab, simply link this cell to the January to the ending balance. Do the same for savings account. The beginning balance for February savings account is equal to the ending balance for January. Now that these are linked, any changes that you make in the January tab will be reflected in the February tab. So now the last thing to do is to go through and update only for items that have changed. In this example, let's say all of my income items and expense items are the same. Then I will simply update the actual account balance to agree to $11.60, since that's what I expect to be in my bank account. And I will also do the same for my savings account. Let's say that was $42 in my savings account. Okay, so my capital account has automatically been calculated. Now I usually update the student loan amount once a quarter, because it's not only the amount that you pay off, but you're also accruing interest as you go along. So that number might be a little different than what we calculate here. But typically I pull the student loan debt amount directly from my student loan online account. So if you don't want to make any updates to your student loan amount at this point, your net worth is already calculated, your 6-month reserve is already calculated, your projections is already calculated. So the last step is to update the summary tab. So here we see that the January current year capital is pulling from L26. Since we've made a duplicate of the January tab and renamed it to February, we can simply copy paste this formula and update January to February. Doing this will now pull the new current year capital from the February tab and L26 here, 1202, and we see 1202. So now we know that our income is now being pulled in. Now let's do the same thing for current year net worth. I will simply copy paste the cell, and then I will simply update January to February. And now we see that the updated net worth is now being pulled from L41. Look at L41, 87.98, 87.98. So there you are. So next week, we'll roll out additional versions to this tracker to help with expense analysis and tracking. Thank you for watching, and see you next week.